Now, what I love about the FTSE 100 apologists who have it in their pension, and check your pension, just you'll be shocked at how many British companies are in there. So over the last 25 years, quarter of a century, we're going all the way back now to the last millennium. This is up about 7.8%. Now, the apologists will say, oh, you're forgetting the anemic dividends that we got over that period, Alpesh. It's not the absolute return. If you include dividends, we did marginally better. There is a group of people who are so used to being ripped off that they are punch drunk with it. And the fact that their pension might do marginally better, actually often not even better than a bank account, has become their metric of measurement. They're not even looking anymore at how much they could have had, how far off the better performing indices, better parts of the world, America, for instance, they could and should have done. They're now just looking at, well, at least I didn't lose any money. The next level beyond that will be, well, at least it's a bit better than a bank account. And the level after that is, well, at least I might just die on the job, and there's always, jumping off a cliff or something, God knows. I mean, it is pretty worrying just how low our sights have been dragged down by IFAs, wealth managers, and FTSE 100 companies, that we're just now, like the old saying goes, life, you'll be lucky to get out alive. Well, nowadays, you'll be lucky to get out with anything resembling what would have been considered a decent pension.